Good morning, everyone. Welcome to our making sense of candles, patterns, and generally the mechanics of the market. Okay. I was doing a one-on-one this morning and we were talking about inventory and cost basis. So the market has an inventory, just like any market has inventory. Inventory is established when prices sell off. Okay. So in this case, I'm going to start here and use this as an example. The market sells off, comes back, and does this back and forth. That back and forth establishes a cost basis of the inventory that we're going to go and sell. Okay? So if I drew a volume profile and I went like this and I start drawing this volume profile, as the market falls, you'll see the volume start to build out in this blue box. Do you guys see that? There's the volume building out in that blue box. That is the cost basis of the inventory that we've bought here. Some of it's below, some of it's above, but this is where the general, most of that inventory is priced here. So if this was a car lot, you'd have your expensive cars here, your cheap cars here, but the majority of your inventory is priced here. Now, when you take it and you sell it, you're going to see this inventory shift from here up. Okay? That is what we call distribution. See? Already the market is distributing this higher. Okay? And the longer it trades, that volume is going to build out because there's back and forth trade. You see? Now, when we get to this point here, we've trapped people long, right? And there's a big distribution here. When we break the bottom of that cost basis, the people who bought above it, who were looking for this, they bail out. And the market comes back. Look where it comes back. It comes right back into that cost basis. Then the large traders, they just stop selling and the market moves back up. It comes back and it retests that cost basis and then back up again. Okay? So as this thing starts to trade, now what happens? So let's go through the anatomy of this. The first people to come in down here are the short sellers. Once the short sellers come in, right? Once the short sellers come in, the large size wholesale traders and wholesale market makers, they will start to build a position on top of the trap shorts. And that's what this big green chunk of volume is. Then we come in. Okay. So as we drag this out, right, we come in. This is us right here. This is us coming in, coming in, coming in, coming in. Now, when we break the top of the retail balance high, that brings in the momentum traders. Do you guys see that? But the momentum traders, when they don't see this, they dump. And it comes right back to where the wholesale top of the cost basis is. So it's fascinating, right? It's really fascinating because you've got wholesale buying on top of, this is our smart money shorts who are covering, right? Smart money. This is wholesale. This is us, right? This is retail and position traders. That's us coming in here. So that's the first set of buyers, second set of buyers, third set. The fourth set of buyers are those momentum traders who come in, right? And they come in right down here, and this is momentum, okay? You guys still with me? When the momentum traders sell off and we get back down into wholesale cost basis, right? When we get back into this wholesale cost basis, everybody stops selling. Now, what has happened is we've trapped people short in this area, here and here, because what happens is people follow price and they get trapped short, but they get trapped short where wholesale, retail, and momentum own. So they're short and there's nobody selling. Then the fifth set of buyers you get that creates this big move up, those are the short sellers who are trapped here and here. They cause this big, big green candle. Does that make sense? That's the anatomy of the move. Now, this is now coming into your cuppy thing, right? Because that move backfills down. There's your cup. Do you notice that the bottom of the cup does not pierce or get into the long positions, right? So the bottom of your cup, where that support is, that's where all of these positions have been built out. This is your foundation for that cup and handle trade. So if you're a trader, now these are 5-minute candles. So if you're a trader, you build your position long here, you use this low as your stop because that is the business. There's no reason for you to be long if it breaches that low. Does this make sense to you guys from a technical aspect for the technical traders? If somebody wants to chat or talk, please jump in. I'll allow you guys to unmute yourselves, right? So that's what creates the pattern, right? Because the selling, right? This is when you take all of that inventory, all of us, we go and sell, and then we sell down here, but we stop selling when we come to the top of that momentum trader inventory, right? And that is, if you miss this whole thing, this is how you negotiate your long trade. Does that make sense? So this is how the pattern is created, right? And I hope what it does, right, is it helps you, right? Does any I'll get to your that's a good one, Zazu. Hang on. I'm going to use that. Stay with me, right? I just want everybody to understand how I walked through it. And this is being recorded so we can replay it, right? So first the market sells off, it creates inventory. That inventory is gone and sold. And then on retracement, this is when the good action happens. The short sellers come in, wholesale traders, then us and larger traders. Then the momentum traders come in when we take these highs, right? Those breakout traders come in, but they don't hold, right? They're like speed dating. They really want, if the market doesn't take out that high, they're gone, right? So they dump, right? And just when they dump, right? Just when they dump, that's when we stop selling again. If you guys unmute yourself, try not to breathe hard. Ask a question. Okay? Otherwise, I'll mute everybody and then you guys can raise your hand to unmute. Maybe I'll do that. We don't want people to get the wrong impression here. So the smart money shorts are down here. The fifth set of buyers are the dumb money shorts who get short following price here. They don't know about inventory. And this is when they rip the market up, that's when they're racing to cover. And we own it all with wholesale, right? So then we sell into it, right? And then when we get down to this area here, this is what creates that cup. So what we want to do as traders is we want to build our long position and we want to sell into this move, right? You want to build your long position because if the long position does not pierce inventory, that means that this is just a quick fire sale to bring more buyers in. So this means we can grab our supply and sell into that strength, which is created by a lack of supply, right? And that's commerce. Okay. So let me bring up Zazu's deal here. Okay. So we've got a rising wedge, right? What this means is the market is being, oh, I better use a different color. Stay with me one sec. The market is coming up into, like, there was obviously some, there was probably accumulation somewhere. Then we break the accumulation high and the market starts getting marked up, right? So what happens is then the market liquidates because you run out of buyers. Sellers start to compete. You see the offer starting to move lower and lower and lower and lower. If you drew a volume profile, there's probably a cost basis right here, right? So that's where the short sellers come in. The short sellers come in, and then wholesale starts building a position on top of them, and then they cut the offer, which means they don't need to sell because their cost basis is under here. So they stop selling and they push up price. The sellers who engage here, they engage a little higher. Same thing happens, right? These are what we call mini sales. This is a hot product. This is a mini sale. Brings buyers. When you drop the price, it brings buyers into the store. The bid is moving higher. The lows are getting higher because the bid is chasing the offer higher. Sellers don't have to lower price because when they lower price, it attracts buyers. Does that make sense? That's very healthy distribution. I would kill for that distribution, Christian. If I was selling 50 million shares that day, or if this was a daily candle, I would love this. This is Bentleys for everyone. This is a round of Bentleys for my friends, right? It's like Oprah. You get a Bentley and you get a Bentley, and this is a beautiful like if you're a wholesaler, if you've got cost basis here and this is happening, everyone's getting paid, right? This is a little different. This is the opposite. This is what happens when sellers are competing and they're moving that offer down, down, down. Then they stop selling and it comes up and boom, right there, the sellers engage again. The market comes back, they come right there, boom, the sellers engage again. So the sellers are having to engage at lower and lower and lower prices to get rid of their inventory. So what happens is, say you're a size seller, you sell, 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 stop selling. You let the market breathe and then you engage. Then you sell it down again. And you and everybody else, because you have to sell and lower price if you're a size seller. Otherwise, you're going to be holding inventory that you can't get rid of. And you don't want that, right? You have to compete with other sellers to get rid of your inventory, right? Then you stop selling. Everyone is trained to think and do the same thing because institutional traders and large traders, right? Right? Large traders are all trained the same. So they say that this is a bearish pattern. I don't know why. Because what I would do is I'd set up a balance and I'd be doing the look below and fail, and I'd be buying this to here, look below and fail, buying this to here, right? Maybe in a longer term it's bearish. I don't use bullish and bearish, right? I don't use those terms. I never use those terms, right? Because they're confusing. All I care about is the balance and the price action. So if I see a balance area, right, I can do the look below and fail, right? I'm not thinking bullish, bearish. I'm thinking, right, where is the bid, right? I'm looking for the bid. If I can see bids, then I know I can trade the edges of this box. And because I'm a day trader, I don't care whether the trend lasts. For me, I just, all I want to do is I want the trend to last long enough for me to make some money.
Hey JJ, it's Christian.
Hey, hey,
Yeah, I'm glad that he sent that picture because I've noticed this subtlety. Like after look below and fail is given at the bottom before it gives this balance of like the rising wedge or whatever, it gives that pattern like that's what helps me. Like say if I miss the look below and fail at the
yeah,
bottom of like down here, it'll start to distribute, but then it'll give like this sub, and then I'll be able to get in on that low. So I'm actually glad that you explained that because that makes sense. And I've been studying that subtlety for the last few weeks. Like every time the
yeah,
distribution is healthy, um, yeah, it'll like start to trend higher and then kind of create that breakout pattern, I guess you would say.
yeah.
Yeah.
See, and if now for longer term traders, right, if you're long size, if the lows are getting higher, you can actually hold into your trade. Now that takes a little bit of nerve to hold that, right? So what I would do is I'd take these lines and I'd have to, of course, I've never worked with this before, but do you see where I'm drawing the line from the top of those candles to there,
Mm-hmm.
right? This is where I would be looking,
It's like loans, yeah.
right? Do you see right here for support to buy? Because it's the top of this little cost basis. It's the top of this little cost basis. So when the market goes back up and it comes down, and if it doesn't break the top of this, I could stay long or add to my position for larger traders. Does that make sense?
Mm-hmm. And it's like it's fractally on like the higher time frame where you were on the other chart before you showed this. It's
Yeah.
kind of like it's the same pattern almost, like how they stop selling
It's
whenever
it's
they have
exactly
that
the
trend
same
lock.
thing.
Yeah.
You're right. You're right. It's exactly the same thing because guess what? The business has never changed in thousands of years. From the,
Yeah.
it's we're doing with this business is buying inventory and selling it. The chart is just a sales chart of how are sales going. Here sales are going great, right? Here sales are,
Yeah.
we got to put the crap on sale and get it out the door, right?
Yeah.
This is get rid of the stale hot dogs before we have to this is, the hot dogs are fresh and everyone's hungry. It's the first inning of the ball game. Here's the seventh inning, right? We got to start putting this crap on sale, get it out the door. We don't want to throw it out. We got to turn that inventory into cash. So a 1 minute chart tells you how sales are going on a minute by minute basis. A 15-minute chart tells you how are sales going every 15 minutes. An hourly chart tells you how are sales going every hour. A daily chart tells you how sales are going day by day. Does that make sense? All it is a sales chart. Do we have to put it on sale? Or can we mark up price? Like I walked into some store in Milan and my girlfriend was walking around and it was pretty fancy because there they don't just let you into the stores. Like some dude in a suit is standing there. And if he thinks that you look like a bum, you don't get in. So, you know, then they let you in. And I'm like touching this belt, and this belt was like 2 grand. I was like, right? You know, and so are sales good? Are people willing to pay that kind of price, or do we have to mark it down and put it in the bargain basement? Right? Okay, what's our next chart before I get carried away here?
Yeah, I had that stop run crushing after
Where's the question?
here. It's
So the
right
stop
after
run
as
causes
it
a major
started.
run because the stops below. Well, see, well, the thing is when you run the stop, right? Say say you had stops here, right? And you run the stops, that creates buying. So anyone who's short under this level will use that as a stop. So when the market takes that out, that creates buying to push price higher. Does that make sense?
Yeah. Could you show it on that chart that I showed you
Which one was that?
or
Oh, here.
drawing? Yeah. Because it's kind of
Yes,
similar
yes,
to what
yes,
you were
yes.
just showing. Yeah.
So what happens is here
Or the
you
main chart.
sell stuff to people, right? This is where you distribute, right? When you take that low, the people who are using that level as a stop, they dump out, which
Yeah.
allows the shorts to come in and bid the market here. Then wholesale builds their position here. Then we come in, right? And then larger traders come in and us. And then when we take that high, the position is here. And then you come back and notice that you don't get back to the position.
Yeah.
Does that make sense?
So that first run that goes higher, is that to in like I guess market making terms, is that to bring in suckers before you
No, no,
drop it
no, no,
lower?
no,
Because
no, no, no.
you'll bring in.
No, 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 no. Hang on, hang on. You don't see, don't don't give the market makers more power than they have. Okay?
Okay.
All they're doing is handing you the donut. They don't make the donut. They have nothing to do with the donut. You ask for a donut, they hand it to you. If they don't
Yeah.
have donuts, they'll borrow a donut and give it to you. Got it? That's it.
Yeah.
This happens because order flow comes in and the people who are selling raise price. So, Christian, if you're here and you own 500 bottles of water and you're at one of those weird concerts you kids go to in the desert and it's really hot, right? And you have 500 bottles of water and you see 2,000 people who are thirsty. Well, guess what? You're going to raise the price of your water. Then you run out of buyers and you put it on sale. Then more buyers come in. And then some guy there, schmuck, starts selling up and showing, like everybody else starts selling water. So you got to put it now. You guys are putting it
Yeah.
on sale, putting it on sale, putting it on sale, right? The market makers represent the sellers and the buyers. They match them. That's all they do. They don't
'Cause I
control
know-
price. They don't take price higher to do stuff. The seller is the one who controls the market. He who has the gold makes the rules.
So the look below and fail setup isn't necessarily like a stop run type subtlety
No,
almost.
no, don't worry about that,
Okay.
right?
Okay. That
Stop
makes
thinking
sense.
stop run. Take this out of it right now. Don't worry about the stop run.
Okay.
The look below and fail, right? Say this is your balance area here, right?
Yeah.
Let me draw this in. If
Yeah,
this
that's
is your
perfect because that's really
balance
what I'm
area,
asking.
right? This is the look below and fail. So what's important to
Yeah.
remember is the sell orders that take the market underneath this level, they complete themselves. So there's 5,000 contracts for sale. Here there are none. So let me go through this
Mhm.
mechanically with you. If I was your market maker and you said, JJ, tap out 5K for me, I'm selling, I'm selling, I'm selling, I'm selling, I'm selling. And down here, maybe there's 500 contracts left of that order of that 5K, right? I've sold 4,500 contracts. I buy the other 500 contracts, put that in my pro account, call you and go, hey, Christian, you're filled, right?
Mhm.
Your order is complete. Now I start raising the offer. Get it?
That makes so much sense. Because it's like
Right?
once those sell orders are complete, and this is an aspect I was listening to you talk about a couple weeks ago, and that was the first time I've ever heard that. Like once those sell orders are complete at the top, that's almost like Jeff Bezos selling 5 million shares. And once he's
Yeah,
done
yeah,
with those, I
yeah,
mean the market's gonna go back up.
yeah. Right? See, everybody thinks that, and then somebody has come up with this term unfinished business, right?
Yeah.
Which makes people short this, right? Which is one of the most ridiculous things. That business is finished. This sell order is now complete. That is
It's
finished
done.
business, right? It's done. There's nothing to sell here,
Oh
right?
my God.
So the market goes back up looking for supply, and that's why this trade works so nicely, because what happens is, right, there's your balance zone. When the market looks underneath that balance, the sell order is complete. It gets back up there. That means no one needs to sell under this level. You go long here, you put your stop here, sell half of it in the middle and half at the top if it gets to the top, right? The same pattern, right? I don't know what pattern this is that you guys call this, right? In technical analysis, right? But that
I
is
guess
what's
that's a stop run.
that's what creates the pattern. Now somebody else had another
Yeah.
pattern here. Bullish symmetrical triangle ABCD pattern, right? So what's happening here, right? I don't know if I can make this any bigger. Okay. So what's happening here is the market moves higher, right? And then it goes on sale, right? And then those sell orders end, and the seller, right? The seller is pushing into this bid, right? This is really interesting because what's happening is when the market backfills, see, there's probably a cost basis under here, and the market backfills but doesn't get down to this level. That brings in buyers, backfill again, brings in buyers, backfills again. And then at this area here, this is price stability. You guys ever hear that build it, they will come? If you, in an uptrend, if you hold price stable, buyers who miss this move will come in here. Does that make sense? Right? So you build that price stability that inspires confidence. And then as soon as you see more buyers coming in, they cut the supply and then you get that big green candle. Because the another nice thing is you get people shorting in here too, right? Those shorts help lift price up. So these are just some like little examples of how these things work and the mechanics of the pattern. So anytime you guys, I'll keep this short because I don't want to keep people too long. Anytime you guys have a pattern and you want to discuss it, throw it up in the chat and we'll rip it apart, right? And we'll figure out the mechanics that create the patterns. This way you know how to trade the pattern because you understand what creates it, right? Right? I mean, there's nothing wrong with technical analysis. Technical analysis is great, but you want to be able to have your trades make sense, right? So if you understand the mechanics of what creates the buying here, right? If you understand why the sellers are stepping in at certain prices, right? If you understand the difference between when sellers are competing and when they're not competing, right? Then you'll understand, look, we had the same here, right? Here's your cuppy handle thing. Look, look, we got liquidation. Where did we liquidate down to? Right here. Because your position is right here. Remember, we built that position here over top this position? That's why the market stopped and then moves higher. It's really simple. No, these candles, right? They tell you so much, but it's not talked about because I don't know why it's not talked about. Maybe it's because a lot of people who've never like created charts and made markets talk about, the seller is the one who creates the market. They come and advertise and get people to buy something. Like those really ugly shoes that Omni wears, right? Those things that are made out of plastic with holes in them, right? They're absolutely horrible looking, but people buy them and the stock is publicly traded and does quite well, right? It's so much easier to rely on your technical analysis if you understand the fundamental mechanics that create the trade. Ah, there we go. Hang on a sec. Right? Sorry guys, do you mind me going over this? I wanted the this thing. Somebody finally posted it. Okay, they call this the head and shoulders, right? The head and shoulders is a distribution pattern, right? So what we got a balance zone here, and we can extend that balance zone here. This is the double of that balance zone. Do you guys see that? So what happens is cost basis is acquired down here. We cut the sell, right? Market goes up, people come in and buy. You get that nice big move up, right? And they sell into it, but it doesn't break these lows, right? So look below and fail, look below and fail, right? Fail to look below, straight back up to the middle, right? More distribution here, up here. And then this is where we get the sellers having to compete, right? So there's nothing magical about this, but if you understand that this is your cost basis, so the market goes up and comes right back into cost basis. But when it breaks that, everyone who's long above there is going to start puking out. Because they're trapped. Bring your charts to life. That's what I want to do. I want to bring the charts to life. not just some pattern or something that we have to memorize. If you guys understand it, if you can put your fingers into it and dig into it and understand what the hell's going on, you'll have a much better success rate in trading, right? You'll have a way better success rate. All these patterns are basic market structure. They're the structure that are laid out by the transactions of the business, right? They repeat themselves over and over again. They work on different time frames, right? Because business is being done constantly, all on different time frames. Larger time frames, shorter time frames. Good stuff. Okay, I won't keep you guys too long. Keep coming up with patterns. We'll keep tearing them apart, right? This way you guys will be informed and you'll be knowing, hey, if we get back down into cost basis, let's not short down here. Let's do the look below and fail of this level, right? And say we break out of a zone here, you're not going to be shorting this and getting stopped out. You'll be able to actually, if you miss this move, then when it comes back and it doesn't take out the bottom of your cup, it's because the cost basis is under there. We go long, right? And then we build trade setups around the pattern and they're depending on the business. So we use the business to build the setup, to manage our risk, right? And then we just keep testing it, testing it, testing it, testing it until it repeats itself over and over again. Once we have a repeatable setup, right? Once we have a setup that's repeatable, and then we also have a setup that's scalable, because this pattern's going to repeat not only on a 15-minute chart, it's going to repeat on an hour chart, right? So once we have that, we can scale the pattern, right? We can scale the setup. So a setup is repeatable and it's scalable. And our risk is always number one, right? As we talk about the great Art Cashin, is he says, I never go into a room unless I know where the exit is. Don't get into a trade until you know where the exit is. So on this cuppy thing, if you're putting a position here together, right, what you want to do is if it breaks that level, that's your exit, right? There's your exit. If you're building a long position here based on this technical pattern, your exit's there because that's the business. It doesn't make business sense to hold a trade back into inventory. That's why the look below and fail, look above and fail work on any market, on any stock, on any time frame, because they are based on the most simple business principle, right? When supply runs out, price goes up. When there's too much supply because sellers are competing, price goes down. It's been that way since the first caveman started selling rocks to other cavemen. When he ran out of rocks, the price of rocks went up. When he had too many rocks, he had to drop the price of his rocks. I don't know what that means, Christian. A little too complex for me. Just keep it simple. When the sell order is finished, go buy some. The market's going to rotate up looking for a seller. You've got product. Now you're the seller. Let them have it. Simple. Keep it simple, right? Trading's like a street fight. You need to have your head clear, right? I don't even know what that means. Just watch the levels. Just watch the levels and do the simple look below and fail. See, because I wasn't trained in in traditional candles, so I'm losing. I'm not getting the subtlety of the question you're asking. The lows are moving higher. If the candle lows are moving higher, that means the buyers are chasing the sellers up, right? So futures trader, what I'll do is I will, you know what? I'm going to save these patterns, futures trader, and I'll do another session on those because that's going to take up some time. Okay? We just did a whole bunch of them if you're joining us a little late. But these are good. I'm sure that, well, you guys have millions of these patterns, right? But there's a mechanical and business reason as to why they occur. All right, folks. Thanks so much for sticking around, right? And we'll get the recording out right away. And we'll keep doing these. Well, hey, why don't we do one of these a week? Right? I'm up for that. If you guys want to do one of these a week, let's do one of these a week. The more you know, the better you're going to trade. The more useful information you have, right? Keep it fresh, right? It's like it's practice, you know? We'll do these at least once a week. Thanks, everyone. Stay out of trouble in this price action. We'll see you soon. Bye for now.